Hello again. So I'd just like to call on the panelists to come on stage, please. So Ms. Herry Cho, Group Head Sustainability and Sustainable Finance at the Singapore Exchange. Mr. Tomo Ishikawa, the Chief Regulatory Engagement Officer of Mitsubishi UFJ Financial Group, and Ms. Hye-Sook Moon, Managing Director of KB Financial Group, and Mr. Masaaki Nagamura, General Manager, International Initiatives at Tokio Marine. Hello? Yeah. So I'm stepping in on behalf of Remco Fischer, who unfortunately is not able to do the moderation. So very honored to take his place and wish him a good recovery because he's down with an illness that prevented him from coming here today. So very happy to be moderating this panel of really great experts. So I don't think I need to do that much moderation, and I'll ask the panelists to share their experiences. I think the session is called Achieving Net Zero in Asia Pacific, but I think what is really the objective of this session is for the experts to share what their role is in the achieving of net zero in the Asia Pacific. So we have a we have an exchange, we have two banks and an insurer, and from their respective positions, we'd really like them to talk about your experiences on your role in the achieving of net zero. At GFANZ, one of the things that we really are looking at here on this subject is that you need to have an ambition first and then a commitment to this. But then once you start to commit, you will then be asked to set targets. And what is really important is your interim targets. So for a lot of the financial institutions, they are setting 2030 targets on their emission reductions. And then once you set your targets, what you do need to do then is to set your action plan. So what we call a net zero transition planning. And at GFANZ, we have developed guidance around financial institutions, net zero transition planning, but also the real economy's net zero transition planning as well. So you can use that to go and talk to your clients or your investee companies as well. With further ado, I'd like to start the discussion of this panel. So I'll start from Mr. Tomo Ishikawa. So MUFG is a leader in Net Zero Banking Alliance, and you play a great role in GFANZ as well. And I just want to get your thoughts around how do you integrate net zero, sustainability, ESG at the very strategic level of your institution and the decision-making processes?
Thank you. I think that's a great question to start with. My name is Tomo Ishikawa. Thank you very much for having me here. We made the pledge to achieve 2050 net zero exactly 2 years ago when we became a member of Net Zero Banking Alliance. Of course, through that, we also became a member of GFANZ. Yuki, as you said, I think the target setting is one important step to do, but that itself is not going to change the real world. The actual work starts from there. So when we made the pledge 2 years ago, I'll be honest, I wasn't sure what that meant. Our CEO made a commitment, and most of us, maybe all of us, said, okay, what does that mean for me personally? You know, institutional level pledge versus individual level action, you know, there's a huge gap. So since we made the pledge 2 years ago, I think the first thing we did, even before talking about this 2030 interim target, was who are we? What is our value? What can we deliver? And most importantly, what is it that we cannot do? I think it's important to acknowledge that before talking about 2030, 2050 target, because target setup will not change the real economy. So having done that, we're doing external work and also internal work. I'll unpack one of each. So in terms of external, I think the most important work, on top of course, GFANZ, Net Zero Banking Alliance discussion, is client engagement. As I said, target setting is just one thing. Engaging or communication, dialogue with our client is very different thing, but that's what will drive the actual emission reduction as opposed to target setting. I think what we concluded as a result of the initial our thinking was that we are not in the driver's seat. We're more of an enabler. But of course, enabler is a very important part of this net zero journey of the whole economy. So what does that mean? We started engaging with our clients, try to understand what they're thinking. We did not want to just say, we made the pledge 2030 and therefore you need to do X, Y, and Z. That's not going to happen. We communicate to our clients, but also we ask them, how are you going to achieve net zero? Because at the end of the day, they're our clients and we're on the same boat together. So it's important to understand what they're trying to do, but also communicating what we wanted to do. What we learned through that process was you cannot approach sector by sector, firm by firm, and say, okay, we'll help you your transition plan by providing transition finance. Maybe micro level, that's what we're going to do. But I think macro level, what we learned through this engagement process was that you need to facilitate the whole of economy transition in Japan or in Asia, because there's a high interdependency, especially to the energy sector. And we actually published all of that finding in our transition white paper. This was back in October last year. But this is to, how should I say, to some extent educate what are the challenges, but where do we see actual opportunities? Because without actually having dialogue with our clients, just talking about opportunity, you will never get a real opportunity unless you hear, listen, and trying to, how should I say, understand how your clients are actually pursuing net zero and what is it that we can actually deliver to pursue our clients' net zero. So that's the kind of external work that we have been conducting over the past 2 years. In terms of internal work, basically all the discussion we're having with our clients and also GFANZ, NZBA, all these work, we're centralizing all the intelligence that we have so that we can do capacity building internally, but also we can make strategic decision at the senior management level. Where's the gap and what can we do to actually fill the gap? So we're doing external work, internal work, but making sure those two are actually working in tandem as opposed to somebody doing the external and somebody else is doing internal. So this, how should I say, institutionalizing initiative isn't just about developing policy or developing some framework. It's actually engaging with the senior level, senior management, the front office, the back office, everyone involved, and how should I say, understanding why we're doing, what can we do, but importantly, what is it that we cannot do, and all of that will allow us to institutionalize the initiative that we're undertaking. Let me stop there, thank you.
Yeah, thank you. That was really interesting. I guess what you're saying is that the net zero transition is a system-wide decarbonization that belongs to everyone. It's everyone's business, but financial institutions do have an important role to play, but that your emissions are your clients' emissions at the end of the day. And so it's really how you can use your influence, but also that you as an institution also have to shift your strategy and direction at a whole institutional level, because it is a system-wide thing for you at the institutional level as well. Yeah, thank you. So now let me turn to Ms. Hye-Sook Moon. So we just heard from Mr. Tomo Ishikawa on MUFG's experience and his thoughts around what does it take for his institution to support the decarbonization of the economy and of their clients. So let me turn to you about your efforts at KB on the net zero journey. Thank you.
먼저 이런 자리에서 이제 KB 금융그룹의 활동에 대해서 말씀드릴 수 있어서 감사하게 생각합니다. 먼저 이제 KB 금융그룹이 어떤 활동을 하느냐를 말씀드리기에 앞서서 이런 금융기관들이 가지고 있는 그 이제 넷제로와 관련된 어떤 그 어려움들, 뭐 앞서서 토모께서 말씀하셨지만 이제 그런 어려움들과 그런 기회에 대해서 말씀드리면서 여기에서 KB가 어떤 어려움과 그 어려움을 극복하기 위한 기회들을 가지고 저희가 활동을 하는지를 말씀드리도록 하겠습니다. 먼저 이제 한국은 사실 한국의 어떤 그 넷제로의 어려움이 결국엔 금융기관이 처하는 어려움과 같다라고 생각을 하는데요. 한국은 제조업의 비중이 다른 국가 대비해서 굉장히 높은 편입니다. 저희가 제조업의 비중이 27%고요. 또한 그 많은 금융기관들이 이런 제조업 베이스에 그리고 탄소 배출이 굉장히 많은 기업들과 거래를 하고 있고 또한 그 작은 그 대규모의 어떤 그 기업보다는 소규모의 중소기업들과의 거래가 굉장히 많이 있습니다. 그러다 보니까 이런 중소기업들이 금융기관이 좀 그 넷제로와 관련된 인게이지를 하기 위한 노력을 하더라도 실제로는 기업들이 처해 있는 상황들이 다 다르다 보니 그 넷제로의 인게이지먼트에 좀 더 관심을 갖는 기업도 있지만 대부분의 경우에서는 우선순위에서 조금 그 차순위로 밀리는 그런 부분들이 훨씬 더 또 많다라고 생각이 되고요. 많은 아시아 국가들의 문제이기도 하지만 또 한국도 마찬가지로 신재생 에너지의 그 비율이 굉장히 낮습니다. 특히 저희는 지금 에너지원 기준으로 21년도 기준으로 보면 10% 이하거든요. 이제 그러다 보니 사실 그 많은 기업들이 뭔가 넷제로를 하기 위한 그 수단으로서 해야 되는 가장 먼저 해야 되는 그런 에너지원을 전환하는 부분에 있어서 국가 차원에서의 어려움이 결국엔 기업의 어려움이 되고 그러다 보니까 금융기관이 어떤 기업들한테 그 넷제로에 대한 부분을 얘기를 할 때에 또 기업들이 처해 있는 그 어려움들이 또 금융기관으로 또 전이되는 부분들이 또 없지 않다라고 보여집니다. 그리고 이제 마지막으로는 사실 금융기관이 거래하는 기업들 중에 우리가 넷제로 전환이 가장 시급한 기업들 또는 산업들을 구분하고 또 거기에 따른 어떤 인센티브를 준다든지 또는 뭐 페널티를 준다든지 하는 이런 어떤 정책들을 추진하기 위해서는 가장 필요한 거는 정보라고 생각을 하거든요. 근데 저희뿐 아니라 많은 글로벌의 금융기관들이 또 당면한 문제이긴 하지만 실제로 우리가 얻는 재무정보에 비교했을 때 비재무정보 특히 이런 넷제로를 위한 여러 가지 그 배출량과 관련된 정보들은 굉장히 제한적으로 습득이 되고 실제로 저희가 정보를 취득하기 위한 노력 대비해서 취득하는 정보의 양은 또 굉장히 적다라는 그런 어려움을 제가 좀 말씀드릴 수 있을 것 같고요. 이제 그럼에도 불구하고 사실은 이제 저희도 열심히 하고 있고 사실 많은 금융기관들이 지금 여기에 일본의 금융기관들도 그렇고 이제 모두가 다 그 목표를 향해서 또 나아가고 있다라고 생각을 합니다. 그러니까 정부 차원에서도 에너지원을 전환하기 위한 노력을 계속 하고 있고요. 또 이렇게 친환경 산업에 대한 육성을 하고 있고 그 시장과 생태계를 넓히기 위한 노력들을 하고 있어서 사실은 이제 이런 부분에서 금융기관의 그런 기회들이 발생될 수 있다라고 보고 또 이 그 거래 기업들이 아무래도 그런 탈탄소를 위한 노력들을 함으로써 이 시설들의 전환 또 거기에 필요한 자금의 수요들이 계속 늘어날 수 있기 때문에 이 부분이 사실 금융기관이 굉장히 어렵기 때문에 우리는 도전밖에 없어 위기밖에 없어라고 생각하는 것보다는 오히려 좀 더 긍정적으로 생각할 수 있는 요인이 되지 않을까라고 생각이 되고요. 저희 그룹에서 하는 그 활동에 대해서 이제 조금 말씀드린다라고 하면 지금 저희가 기회 요인이라고 생각했던 부분이 저희 그룹의 활동으로 연결된다라고 말씀드릴 수 있을 것 같습니다. 여기 이제 한국에 계신 분들은 잘 아시겠지만 사실 KB금융그룹은 국내에서 가장 큰 규모의 금융그룹이고 저희가 굉장히 다양한 그 금융업종을 가지고 있는 이제 계열사들이 있습니다. 그래서 그런 계열사들과 같이 해서 사실 고객들의 이제 그 넷제로를 지원하는 역할을 저희가 하고 있다라는 말씀을 드리고요. 저희는 이제 먼저 그 저희 자체가 아까 그 말씀 주셨지만 유키께서도 말씀 주셨지만 사실 목표를 세우고 그 목표를 이행하고 그리고 그 이행하는 이제 그런 계획들을 계속 발표하는 것들이 정말 중요하다. 그리고 그 고객과 커뮤니케이션 하는 것들도 굉장히 중요하다라는 말씀을 주셨는데 저희는 조직을 이제 경영진 그리고 보드 레벨에서의 조직 체계를 갖추고 그 조직 체계에서의 어떤 목표들을 넷제로에 대한 목표, 내부의 목표와 그리고 우리가 거래하고 있는 기업들로 구성된 저희의 자산 포트폴리오에 대한 넷제로의 목표를 먼저 설정을 했습니다. 그 설정한 목표에 맞춰서 저희의 계획들을 이제 계속 발표하고 저희 보고서를 통해서 매년 그 이행들을 이제 말씀을 드리고 있고요. 저희의 탄소 중립 그 전략은 KB 넷제로 스타라는 걸로 이제 요약이 되는데 뭐 저희가 친환경 산업에 대한 육성과 지원을 하겠다라는 부분 그리고 그런 넷제로의 전환을 좀 더 가속화할 수 있도록 파리 기후 협약에 이행을 도울 수 있는 거기에 얼라인하는 그런 활동들을 한다라는 내용을 담고 있고요. 가장 크게 저희가 이제 강조하는 부분은 아까 저희가 한국의 상황 그리고 금융기관들의 상황을 말씀드렸는데 이제 그 상황에 맞춰서 저희가 거래하는 기업들 특히 중소기업들이 굉장히 어려운 중소기업들의 그런 넷제로를 도울 수 있는 것들이 저희가 페널티를 주는 방식 그래서 당장 안 하면 우리라는 거래를 할 수 없다라는 그런 식의 커뮤니케이션이 아니라 이들이 앞으로 10년, 20년, 30년에 걸쳐서 경제가 변화하는 그래서 탈탄소가 되는 이런 경제 상황에서 이들이 기업을 영위할 수 있는 그 지원을 하는 차원으로 저희가 접근을 한다라고 보시면 될 것 같습니다. 그래서 많은 금융기관들이 KB뿐 아니라 국내의 많은 금융기관들이 중소기업에 대한 ESG에 대한 그 컨설팅 지원, 특히 탄소와 관련돼서 어떤 목표를 세워야 되는지, 그리고 그 목표를 어떤 계획을 세워서 이행해 나가야 되는지, 그리고 어떤 것들을 이해관계자들 그리고 투자자들 그리고 저희 같은 금융기관한테 그 어떤 정보를 제공해야 되는지를 저희가 설명드리고 교육드리고 그리고 필요한 부분에 있어서 현재의 수준을 진단하는 그런 그 활동들을 계속 하고 있고요. 또 그런 활동을 통해서 필요한 자금을 저희가 조금 더 노력하는 기업에 조금 더 자금을 지원하는 그런 형태를 하고 있다라고 말씀드릴 수 있을 것 같습니다. 사실 KB금융그룹이 KB금융그룹뿐 아니라 많은 금융그룹들이 굉장히 많은 영향력을 가지고 있습니다. 그래서 그런 영향들이 사회에 굉장히 선하게 될 수 있도록 노력을 하고 있는데요. 이제 그 예로 저희가 오늘 뭐 탈석탄 관련돼서 앞 세션에서도 말씀하셨지만 저희가 금융기관 중에 가장 먼저 탈석탄 선언을 했는데 그게 이제 마중물이 돼서 굉장히 많은 국내에 있는 금융기관들 그리고 기업들이 탈석탄에 동참할 수 있는 이제 계기가 됐습니다. 제가 이 말씀을 드리는 건 저희가 금융기관의 이런 작은 활동들이 사실은 저희가 모든 거래하는 모든 기업들한테 영향을 미칠 수 없을 수도 있지만 결국에는 저희가 이런 것들이 마중물이 돼서 저희뿐 아니라 여러 금융기관들이 동일한 목표를 가지고 동일한 활동들을 해나가면서 한국의 이런 넷제로 그리고 이제 저희의 금융기관의 넷제로의 목표도 달성할 수 있지만 결국에는 국내의 넷제로 목표를 달성하는 데에 굉장히 큰 역할을 할 수 있을 거라고 기대하고 있습니다.
Thank you. Thank you for sharing that. I think both MUFG and KB have said very similar things, that client engagement is one of the key strategies that you are pulling for your commitment, but also for supporting the net zero of the whole economy. And that, Ms. Moon, you've talked about education, training, and incentivizing your clients to do their own transition planning. I think that's really important. Okay, thank you. So we'll move on to an insurer, Mr. Nagamura. If we can maybe get your views as a insurer on Tokio Marine's initiatives to support the Japan's pledge to achieve their net zero goals by 2050. Thank you.
Thank you, Yuki-san, for the introduction, and it's a great honor to be here to be part of this important discussion. My name is Masaaki Nagamura, and I serve the Japanese insurance company Tokio Marine. It covers almost everything, but it started as a non-life insurance company back in 1879. I'm also a privileged member of the TCFD representing Japan, and I'd like to take this opportunity to thank all of you who have supported the work of the task force and incorporating TCFD in your corporate disclosures. But today I'm sitting here as a member of Tokio Marine, which is something I'm not really used to, but I'll do my best to answer your questions. So Tokio Marine Tokio Marine's insurance underwriting portfolio consists of all kinds of commercial and personal activities. And this implies that for Tokio Marine to achieve net zero, including its scope 3 emissions, the entire society needs to be decarbonized. As we all know, carbon neutrality by 2050 requires fundamental change in the way businesses are run. And you don't need to be educated on this. So the notion of which prompted Tokio Marine and Nichido Fire, the group's core business entity based in Japan, to launch an internal Green Transformation Task Force, or GX Task Force in short, in February 2021, to strengthen its capability to assist corporate clients in their efforts to decarbonize business models. The task force became a permanent division later in the year to function as an internal hub for developing insurance-related solutions, as well as co-creating businesses to promote green transformation with third parties such as local governments and startups. And since its launch, the GX division has been instrumental in promoting insurance-related solutions for offshore wind power generation, storage batteries, and decentralized energy distribution systems, to name a few. Several years ago, we purchased an entity called G-Cube, which specializes in underwriting wind power or other types of renewable energy technologies. And in parallel, the GX division has been partnering with MUFG, that's Ishikawa-san's bank. We formalized a team of experts to offer consulting services to corporate customers which are seeking help in disclosing climate-related information in accordance with TCFD recommendations. And speaking of TCFD, the task force incorporated recommendations to plan and disclose its metrics in its metrics and targets guidance to disclose a transition plan towards carbon neutrality in 2050. So through the green transformation efforts, we are starting to accumulate practical knowledge and expertise in assisting corporate clients to disclose decision useful information for investors. So by making our knowledge and solutions available, our aim is to help our corporate customers transform their business to emit less. We will then be rewarded by reduced insurance-associated emissions. And aside from our core business activities, we are involved in various policy-making or industry-led initiatives to promote a green transformation for the corporate players. One of which is to be part of the GX League, which is a private sector-driven initiative to promote green transformation across the business sectors. For instance, one of the new products that we produced several months ago was to give a summary report on how the so-called avoided emissions should be reported in their reports. I'm not going to go into details, but we think that this is a good, encouraging concept for corporates which have expertise or technologies to change the world, to help change the world to decarbonization. Aside from the regular scope 1, 2, and 3 emissions. So those are the kind of efforts that we have been dedicating ourselves. Thank you.
Thank you, Nagamura-san. So you shared with us what you are doing inside your own company, which is the GX team or the task force, and then you are also partnering with MUFG on advisory on reporting, and then you are also collaborating at the industry level on this GX League. And I think your work on avoided emissions is very interesting. Basically, for those that have not heard of avoided emissions, it's about, maybe you can explain a little bit better, but let me try here. Avoided emissions is about activities that help other people to reduce their emissions. So you yourself might have your own carbon footprint, scope 1, 2, and 3, but this is sometimes said as a scope 4 emissions, which is to support other people to decarbonize, and that normally doesn't get factored in as your contribution. Thank you. Then let me go on to Herry. So SGX Group is one of the founding members of the Net Zero Financial Service Providers Alliance. And you've been doing amazing work in there, but I guess a lot of people would be wondering, what is the role of SGX and other NZFSPA members on the net zero journey?
안녕하세요. 저 싱가포르 거래소의 조엘이라고 합니다. 코비드 후에 처음 오게 돼가지고 지금 3년 반 만에 온 건데 진짜 오랜만에 오니까 너무 푸근하고 좋고, 이제 UNEP-FI 라운드테이블에서 여러분 이렇게 만나게 돼가지고 반갑습니다. 저 나머지 연설은 영어로 하겠습니다. 네. So just talking about exchanges roles. Before I talk about NZFSPA, if you don't mind, I'll share a little bit about what role exchanges play overall and what they play in the context of net zero as well, and why that is important. Well, just from high-level statistics, by today, about 92% of GDP globally has committed to net zero. That covers about 85% of all population and 88% of global emissions. Now, if you think about the amount of funding required for that, many of you would know these statistics. So until 2050, to reach net zero, the total amount of funding required is about 125 trillion, which if you roughly divide it, is about 4 trillion per year. Now, if you think about the size of the capital markets, The equity capital markets as of end of 2021 is about 124 trillion. And the bond capital markets is about 126 trillion. So actually the capital markets, the size of it is staggering. So then what role does exchange play there? Well, exchanges are the ones who are supposed to be providing the platform where this vast amount of capital can operate in an orderly, transparent, and fair way. And if we just look at the equity capital markets, about 50,000 companies account for those 125 or so trillion. So the role that exchanges play is not only sort of playing the market, but that there's few roles. So let me then bring it down to SGX level. Now, SGX Group, we are actually a listed company ourselves, so we do have our own shareholders. We also then operate the markets, which is a multi-asset exchange. We've got cash equities, we're well known for derivatives as well, fixed income, commodities derivatives. We also operate carbon markets, voluntary carbon markets. So we are a multi-platform exchange. And so it's very important for us to embed sustainability overall, as well as some of the net zero ambitions into the business that we operate. Thirdly, we are a frontline regulator. So, for example, we do set reporting disclosure standards for our listed companies. We actually made sustainability reporting mandatory back in 2016 already. So we were quite a front runner in setting that for as an exchange for the listed entities. Last year, we also made climate-related disclosure mandatory as well. So, and of course, by the very fact of who we are, we do sort of sit in the middle of the ecosystem, so constantly bringing the ecosystem together. So let me just give some specific examples of how that plays out. Well, I think we already mentioned of difficulties in data provision. So the fact that exchanges then can set certain levels of either mandatory or sort of encouragement in disclosure, and I'll discuss a little bit more about that in the second question that you may ask me. That's very important, and to have a constant loop of conversation with the investors, but other financial institutions, as well as the companies themselves, because as Ms. Moon was saying, actually on the ground, vast number of these listed companies, they are actually still SMEs. They have limited resources, they just simply don't have the capacity to do this in great amount of detail. So how do we overcome this? So, working through these components. Now, second one, let's just briefly talk about the market itself. 42% of the global equities is actually passively managed. What does that mean? It means that you don't have an active fund manager or portfolio manager who's picking stocks to put money into a bucket of capital. It means that there is an index that is methodology driven, that actually automatically includes certain number of companies, and then the fund tracks that. So a typical example of that is an exchange traded fund. So with 42% of equity doing that, it's very important to put some focus on this, but only 1% of that portfolio, that total pool, is net zero tracking today. So clearly, there's vast amount of work that needs to be done there. And that's some of the work that we've been doing with partners. For example, with MSCI, we've been actually been very hands-on involved in creating an index that is forward-looking from climate commitment but action perspective, which I can share a little bit more about. Now on to NZFSPA, which stands for Net Zero Financial Services Providers Alliance. So this is NZSPA, like we call it in different ways. So it's a little bit of a hodgepodge in a sense. There's a group of 27 institutions here. Those include 8 exchanges. It also includes index providers, credit rating agencies, auditors, ESG rating agencies. So typically institutions that are actually a very important part of the ecosystem that glues many of the financial system together. And what we've committed to is not only our scope 1, 2, and 3, but actually in many ways then scope 3 plus or scope 4, however you want to call it, which is that by 2050, we will be aligning our services to net zero. So in many ways, actually for service providers, it's very indirect. Derivatives, for example, instruments by nature are indirect because that's why it's called a derivative. But if it's cash-settled derivative, how do you define the impact that someone hedging on the price of a commodity has on the actual emission? This is not so straightforward. So these are the kind of dilemmas that exchange members, for example, are working through at this point in time, and also for equity markets as well. Actually, exchanges actually make profit from volatility and trading that happens, and so actually it's an indirect relationship to the emissions of the companies that are operating on the exchange. So there are a number of us who are putting our heads together to come up with as ambitious a target as possible and to disclose how we're going to implement this over time, and that should be within the next year or so.
Thank you for covering not only SGX, but NZFSPA and also introducing the passive investment, which is something new that GFANZ is doing as well. And I thought what was really interesting is getting the financial services emissions to net zero. That's really interesting. I guess that requires a lot of further guidance and development around the metrics and KPIs. Okay, thank you. Let me move on to another topic around the net zero and the role of financial institutions, which is policy and regulation and your interaction. Although SGX wears two hats, you are a policy or regulator. But maybe I don't know if any of you would be interested in answering this question about what is your view of the role of regulation in driving the transition to a low carbon economy, and how can regulators and financial institutions work together to achieve this? Anyone interested?
Maybe I'll kick off. But before answering to your question, I thought it was interesting when, Harry, you mentioned about this $100 trillion of money required, and equity and debt capitalization added is more than that. And actually, it was interesting. My daughter, who's 13 years old, I thought I'm smarter. At least I'm older, and I thought I'm smarter. And she asked me, "How come, Daddy, when the world needs this, whatever the amount of money, and if the money is there, why is it not flowing?" And I thought I have an answer, but I started explaining, but I didn't have a clear answer. And maybe that's part of the reason the money is not flowing, and all the work that we're doing, insurance, bank, and of course, exchange or infrastructure, part of that may be regulation. And to some extent, I would like to answer your question: what can regulator or policymakers or policy can do to make this flow actually happen? I think when we, for example, talk about this regulation in the context of climate, we start talking about taxonomy. And with all due respect, I think taxonomy, the invention of taxonomy was a great start, but I don't think that will solve everything, because taxonomy may be a good framework if you're developing, for example, green bond, or if you want to measure greenness of your balance sheet. Maybe that's a good tool to use because that will standardize the measurement. However, for us as a commercial bank, we do not lend to technology. We finance corporates, and corporates with management and their commitment, strategy, governance. You finance company as a whole, as opposed to say, oh, you meet this threshold and therefore you're complying with whatever taxonomy and then we'll finance, or if you're not meeting with whatever threshold, we will not finance. Of course, there will be meeting a technical threshold or not will be one factor, but that is just one factor, one piece out of the whole jigsaw puzzle. So taxonomy, I know ASEAN is developing, which again, I think it's a great tool, but you need to complement taxonomy with broader regulation and policy. And I'll make two comments in the context of what regulation policy can do. One, I think we heard in the previous panel, is about bankability. So, for example, new technologies, unproven technologies, of course, we're willing to finance, or maybe insurance may want to insure that type of project. However, if the technology is not, proven yet, it will be difficult, and we're not supposed to be taking huge risk. And the government can and should play a role to provide subsidy, grant something so that the technology can be scaled up. And I discussed this in the panel yesterday, but the US IRA, Inflation Reduction Act, is a great example. I mean, that clearly changed, it was a game changer. It was climate, but also it was an industrial policy providing $370 billion of tax credit. Clearly, that subsidy made huge difference. So I think that's one part the government can play as part of regulation and policy. The other one was to Yuki-san. I'm sure you are well aware, and you may be better placed to discuss this, but the coal managed phase-out discussion, we know, and we've been part of this working group, we know we need to phase out coal power plants, and then simultaneously you invest in renewable. But at the moment, there will be a backlash if we finance coal, even if the purpose is to phase out. So micro level, we need to, of course, make sure the coal power plants phase out plans are credible. But at the same time, the government or policymakers, it's maybe G20, G7 level, they have a role to play to change the narrative so that we can go and invest in this coal power plants phase out project, as opposed to kind of, potentially being criticized, and then it will be challenging for us to be invest in this type of transaction. So I think GFANZ is doing great work to come up with this framework, but private sector alone cannot do this. As you said, there are 5,500 coal power plants, so there will be 5,500 managed phase-out transactions in the next, 20 years, 30 years. And, you want to make sure that the government support this type of transaction. And I think that, again, policy regulation can help change the narrative so that we can all comfortably kind of invest in this type of transaction. Let me stop there. Thank you.
If I can just add to that. So then we're talking about carrots and sticks, and regulators and regulation can play both roles. In some ways, making something an obligation are typically stick. And so disclosure rules are sticks. But, by now, from exchanges perspective, 34 exchanges around the world have made sustainability disclosure mandatory. And if that hadn't happened, and which equates about 20,000 companies now having to report mandatorily, information just won't be there. So there are certain aspects where the stick can go a very long way. But on the other hand, carrots, so as Tomo-san was mentioning, it's many companies and many entities, and even at personal levels, we like incentives more than sort of stick and whip coming out. So there are certain initiatives to help drive grants, very specifically, for example, green social sustainability bond and loan grants. In Singapore, for example, there are others, Hong Kong does it as well, and there are initiatives to help give grants to those who want to issue transition bonds or loans in the future as well. Also, on the other side, part of the carrot should be supporting the system. This field at the end of the day is quite technical, and unless you're living and breathing it day in and day out, You can hear everything that experts say, but it's not so easy for it to stick through and that to therefore be translated into what you do day to day. And therefore, training, the regulator-supported training, capacity development is very, very important. And that's at all levels. So, for example, we had mandated one-time sustainability training for all board of directors of listed companies. So that equated to more than 2,400 directors being trained in the past year and a half or so, which has proven obviously to be very popular. There's demand for more of that. We've also helped to train more than 2,200 people on TCFD, 101, 102, and very specifically for practitioners as well, separately on 330 people on how to actually do the TCFD. So this kind of support is something that's also much needed and ideally as connected together as possible between different markets.
Thank you. So I heard standard building, like taxonomy, disclosures, like reporting and pricing, including subsidies and grants and capacity development. Thank you. Let's move on to the last round of questions. If you can keep your answers relatively short so that we can finish on time. So starting with Mr. Nagamura, how can insurers support the achievement of net zero while promoting sustainable practices among their clients? And in particular, given you've played a big, long-term leadership in the net zero and also in the PSI, the Principles for Sustainable Insurance, what advice would you give to other insurers in the region that are just starting out their journey on net zero? Thank you.
Thank you, Yuki. Well, insurance plays an indispensable role in facilitating finance or investment in decarbonization or transition technologies. Now, having said that, underwriting new or unproven technologies is not easy, as was the case in Japan, where insurers have struggled to underwrite solar PVs profitably. This market segment is seen as challenging for insurers. Partly due to the rush in scaling solar energy power producers. Some of them were constructed in less than suitable settings, which resulted in landslides and damaged solar panels. So we learned a lot. But we won't let our insurance payment go wasted. Enhanced underwriting discipline, fortified by a more sophisticated risk evaluation, it should make insurance terms and conditions a useful indicator of the project's sustainability. So if you're getting unfavorable rates or conditions, that is a sign of some kind of a problem in your project. So the reduced likelihood of physical and consequential losses is hopeful to assist lenders or investors' decision-making in a more positive and risk-sensitive way. That's how I think. Now, how to incorporate transition risks in insurance underwriting is a tricky subject. In case of property insurance, all things equal, there's no rationale to incentivize a lower emitting project by applying credits. This means it is difficult or even inappropriate in most cases to incentivize a business to reduce its emissions simply by giving a favor to insurance premiums. Our approach in reducing corporate customers' transition risks therefore boils down to how we can communicate with them the importance of putting in place a sound transition plan. Designing a credible transition plan requires a company to think through its pathway to net zero in a practical manner. So in this respect, insurers may tap into their vast network of customers, which helps insurers to identify leading practices in developing a credible transition plan. This practice is not without challenges, though. particularly if you are in a broker market. For those of you who are not familiar with how insurance products are distributed, there are two types of markets, which is a broker-led market or agent-led market. Brokers stand on the client side, and the agents stand on the insurer's side. In any way, in markets where insurance brokers play a key intermediary role, insurers are not allowed to communicate directly with their insurers, let alone to discuss about transition risks which have nothing to do with the coverage offered under the insurance policies in force. So my observation is that a new protocol needs to be set up to enable insurers to coordinate with brokers. So lastly, for insurers starting the net zero journey anew, I would recommend that you start from understanding the national decarbonization pathway of your major markets. Each economy has its unique challenges in achieving net zero by 2050. So you would then need to find out where each of your customer stands in the light of its local decarbonization pathway. Building on this foundation, you can plan for solutions that best fits your customers. This must be a time and labor consuming effort. To take some of the burden off your shoulders, it may be beneficial to be part of a group of like-minded actors with a mix of various industry types. So, as many people have mentioned already, climate change is not an issue to be tackled alone. It's good to be part of a group.
Thank you. I think what you said about client engagement and knowing your customer in a different way that you've known them in the past, like more new information from them. I think that's really a key takeaway. Thank you. Ms. Moon, may I ask, so following that client engagement discussion that we had just now, how can you incentivize as a financial institutions your clients to transition towards the low carbon economy and adopt the sustainable practices? You've covered it a little bit in your earlier answer, but if you can talk a little bit more about how you are working with your clients.
앞서서도 말씀을 드리기는 했는데 이제 저희는 뭐 그 많은 기업들이 많은 고객들에게 뭐 SGX도 말씀하셨고 뭐 토모께서도 말씀하셨지만 이제 인센티브와 당근과 채찍이라는 그러니까 네거티브하고 포지티브한 방식의 이제 두 가지의 어프로치들을 모두가 한다. 저희도 마찬가지로 네거티브한 방식과 뭐 포지티브한 방식의 두 가지 어프로치를 같이 한다라고 말씀을 드리겠습니다. 다만 이게 이제 그 고객사들이 과연 우리가 단기적으로 우리가 네거티브한 방식으로 어프로치 했을 때 따라올 수 있느냐라고 하면 아직까지는 환경적으로 고객사들이 열심히 노력하더라도 실질적인 성과를 보이기가 굉장히 어려운 환경이다. 그렇기 때문에 저희는 조금 더 네거티브한 것보다는 포지티브한 방식의 인센티브를 주는 방식으로 가고 있다라는 말씀을 드리겠고요. 이제 그런 부분에 있어서 저희가 아까 말씀드린 것들을 조금 더 자세하게 말씀드린다라고 하면 사실은 그 저희도 마찬가지지만 넷제로를 하겠다라고 생각을 했을 때 가장 중요한 건 목표를 세우는 겁니다. 근데 목표를 세우려고 하면 우리가 현재 지금 어느 수준을 하고 있는지를 알아야 우리가 거기에 앰비셔스한 목표를 세울 수 있다라고 생각이 들고요. 근데 많은 중소기업들이 실제로 내가 지금 어느 정도의 배출을 하고 있는지, 그래서 내가 2030년, 40년, 50년에 얼마씩을 줄여야 되고 어떻게 이행을 해야 되는지를 계획을 세우려고 해도 현재의 수준을 알기가 어렵습니다. 실질적으로 우리한테 대기업한테는 아주 어려운 일이 아닐 수 있지만 중소기업들한테는 굉장히 어려운 일이 될 수 있기 때문에 저희는 먼저 지금 현재 그 기업에서 배출하고 있는 배출량이 어느 정도 되고 있는지를 측정할 수 있고 관리할 수 있는 방안을 제공을 하고 있고요. 두 번째로는 이런 측정과 이제 관리가 되면 목표를 세워야 되는데 사실 이제 이런 목표들을 세우고 이행을 할 때 어떤 방식으로 해야 되는지 뭐 어떤 회사는 자문사를 통해 가지고 그런 교육들을 받기도 하고 또는 뭐 컨설팅을 받기도 하지만 많은 기업들이 사실 여력이 그렇게 여유가 있지 않기 때문에 저희가 아까 말씀드린 대로 별도의 ESG 컨설팅이라는 조직을 통해서 고객사가 그 필요한 부분에 대한 목표를 설정한다라고 하면 그런 부분들 그리고 그 이행에 대한 필요한 것들을 컨설팅을 통해서 진단을 하고 지원을 하고 있고요. 그에 따라서 저희가 필요한 자금의 지원들이 이제 분명히 있습니다. 그러면 그런 자금 지원들을 어떤 방식으로 가장 효과적으로 고객이 그 설비 투자를 할 수 있도록 저희가 그런 자금 지원에 대한 컨설팅까지 같이 포함해서 진행을 하고 있다라고 말씀을 드리겠습니다. 그리고 저희가 이제 그런 기업에 대한 지원을 할 때 두 가지 이제 관점에서 보는데요. 하나는 대기업의 공급망상에 있는 기업들, 이제 1차 벤더는 대기업에서 커버가 되지만 이제 대기업이 커버하기 힘든 2차, 3차 벤더로 내려갔을 때 그런 협력사들에 대한 지원을 좀 더 금융기관이 적극적으로 하고 있고 그리고 저희가 거래하고 있는 저희의 이제 중소기업 고객들에게 이런 서비스들을 저희가 제공한다라고 보시면 될 것 같습니다.
Thank you. So you covered data and consulting services, advisory services, and also about working with not just your immediate customers, but through their supply chain as well. Thank you. So we'll move on to Herry about stock exchanges. You've touched upon how, as a regulator, you were able to mandate reporting, but what are the activities that you're doing which is more on the carrot side of encouraging companies to adopt these practices?
So I've shared a bit on the carrot as well already, but since we're on the topic of disclosure, what we found is it's one thing for companies to then go ahead and disclose, but it's another thing when you actually start to compare the different disclosure of the unstructured information and try to find apples to apples. Sometimes you don't have apple to apple in a single report. Even the emission data is different on page 4 versus page 200. So one of the ways that we've been helping the market is to provide a disclosure platform for starting with our listed companies. It's called ES Genome, like DNA sort of genome, but ES Genome. And we had helped to distill 27 key indicators across ES and G, having compared key standards and frameworks such as GRI, SASB, TCFD to distill these. And we've been offering this free of charge to our listed companies. And on the back of that, then investors can have a bit more of an apple-to-apple information, but it also allows companies to actually produce a bare-bones sustainability report that meets our sustainability reporting listing rules regime as well. We've just seen the first sustainability report of one of our listed companies that came out automatically on the back of filling this in a bit more structured way. So that's perhaps one way that we can help. I've already mentioned about disclosure, the capacity building. I won't go into it further, but I think all of us playing our roles to come up with what we believe are the best instruments that will actually channel the capital to where it needs to go. There's no right or wrong answer for that, but if all of us put focus on how does the decision of a financial institution not only impact your own emissions, but can have a positive impact on the company level as well. Like if you just divest in a very liquid market and someone else just takes your share, what impact have you had, right? So I think all instruments that we're working on must try to impact the real economy corporates that we are all helping to transition. Final component, and I think everyone on this panel I know are very much so doing this, but much of this work cannot be done alone. So we also play our part in having certain leadership roles in industry associations or the industry coming together. One that was mentioned was as part of the founding membership for NZFSPA, but specifically on net zero. Our CEO is also on the global sort of leadership team for GFANZ. We will be looking to lead a new work stream that cuts across the different alliances on passive investing, because we do think that's a bit of a gap that needs more addressing. Also coverage of what's the best-in-class type of an index that also doesn't just necessarily exclude whole geographies and sectors just because they're high emission today. How do we be more inclusive in indices and passive investing, and to have an impact as well? So these are some of the ways that I think exchanges can help.
Thank you. So an inclusive but net zero aligned passive investment, that's quite an ambitious project. Looking forward to that. So final question to Tomo-san. So in the APAC region, many of the countries are yet to announce their net zero ambitions. And in this context, how do you think financial institutions in the region can move towards net zero, and what are the factors to consider?
Sure. I know we have to wrap up in like 30 seconds, so I'll try to be quick. For us, many of us, this is sustainability project. But when I talk to our colleagues, for example, in emerging economies like ASEAN, for them, it's not just about sustainability, it's also about industrialization. So how do you industrialize while reducing CO2? That's not the project that's taking place in Europe or US, right? Totally different. But at the end of the day, this is about whole of economy transition, industrialization. How do you do that? As I said in the beginning, we're not enforcer. We committed to 2050 net zero, but we don't go to our clients and say, we committed to net zero and therefore you must do X, Y, and Z. That's not gonna happen unlike SGX or regulator. What does that mean? Our value, as I said in the beginning, we think we have a value, not just the financing, but we can convene. We can connect all the dots and stakeholders, whether it's a client, government, of course, investors. That's something we can do. And of course, GFANZ is doing a great job. And I'm sure it will continue doing the great job. But I think MUFG and maybe same for other banks, we're all trying to become mini GFANZ each, right? So that we're connecting everyone and accelerate this journey by, again, bringing everyone together, as opposed to just say, here's the money, here's the financing, and you have to do that. That's not going to happen. So GFANZ doing great work, and we hopefully will be mini GFANZ each. Thank you.
Thank you. That's a really nice phrase, mini GFANZ. Thank you. I think financial institutions are everywhere in the economy, and I think that's what you're saying, that it has a strong convener role. Yeah. Thank you very much for all the panelists, and thank you to the audience for listening in, and we look forward to further discussions and sharing like this in the future as well. Thank you.